Hello, good morning, everyone. Welcome to our morning market update I'm just going to move the camera up a little bit so you can see me a little better, for Wednesday, April the 5th. I don't even know what month it is. Wednesday, April the 5th of 2017. This is George Papazov, owner, founder here of Trade Pro Academy. My arms are really sore today. I just went to the gym this morning. I don't know if I'm going to be able to click the mouse, which is really good for today because that limits me in the amount of trades I'm going to do. And muscle soreness is a good way to limit the amount of trades that you execute. Because I know one of the problems for traders, they tend to overtrade. Well, I'm not going to have that problem today. All right, we got an exciting day. There's a lot of exciting stuff taking place, a lot of action. You're going to see a lot of different movements. But I'm going to warn you today, today's got the potential to be a blowout upside day. It's going to rally big time. Or you could see some more double-sided trading, and that depends on a number of things, and we're going to talk about that. All right, in today's markets, Asia's up 0.3%, Hong Kong's up 0.6%, China up 1.5%. So China comes out of the gate just swinging. India up 0.2%, Europe at midday 0.1%, Paris 0.1%, Frankfurt down 0.3%. So Asian session started strong, European session fizzled out a little bit, and futures in the S&P 500 currently up. They're rallying. They went over yesterday's high, so we're getting new highs here that are coming in. NASDAQ is down a little bit, but it's recuperated. Crude oil is up almost 1%, up to 51.5. All right, I'll tell you what the target for crude oil is in a couple of minutes and what you should expect today. Big day for crude oil today, by the way. Gold down 0.3, trading at 1254.70. I'm looking for a short on gold if equities continue on the upside, all right, due to weak seasonality and a number of other reasons I've explained in our subscriber room here. Today's economic calendar, we got mortgage applications at 7 that already came out. 8:15, we had a huge report. We'll start with that, ADP jobs. For those of you who don't know what ADP is, once a month, there's a report called Non Farm Payrolls. It's a massive report, and it shows monthly gains or losses of jobs across different sectors in the private sector. So that report is used for a lot of reasons, mainly to indicate the health of the economy, and the Federal Reserve closely monitors that. And we know anything that's closely monitored by the Federal Reserve is closely monitored by traders, which means there's a lot of action around those days. That's this Friday. Well, the Wednesday before that Friday, or 2 days before, there's another report that comes out of ADP. ADP is one of the companies that's responsible for doing the majority of payrolls for private companies, all right? So they're a payroll company, but use those stats to gauge whether or not there's job additions or subtractions. So this is a precursor or a foreshadow to what could happen on Friday. And Friday is a big day for the market at 8:30 in the morning. We're getting a big release. So at ADP non-farm employment change, 263,000 jobs, smashing the 184 expectations, absolutely annihilating it. That's why you're seeing strength into the open here, into the late Globex, early U.S. session. That's what it is. All right, it's undeniable. It's strength in the jobs market. All right, it's the third consecutive beat of the forecast from analysts, so that's phenomenal. The market's showing some resilience, especially in the labor market front. Why is that important? Janet Yellen and the Federal Reserve has said, we're continuing our upward policy of hiking rates as long as jobs are strong and inflation strong. Well, we got one of the two things confirmed today. All right, there is, however, one bearish note that many traders miss because they don't look for the revisions. I personally pay more close attention to the revision than the headline number, although the headline drives all the algorithm and initial emotional trading. You'll see a lot of movement up and down on the initial headline. That's algos. All right, last month's number were revised down to 245,000 from almost 300K. That's nearly a 50,000 revision. So I don't know what ADP did, but they dropped the ball. They overestimated the number of jobs added. So all that strength that was built into the market was on 50,000 jobs less than it should have been. Does that make sense? Or 50,000 more. It overshot it by 50K. They revised that lower. So I took very special note of that. But despite that, ADP numbers were strong. Good jobs number this morning. S&P and equity markets are ramping higher. And I think today we got a blowout trade to the upside waiting to happen. We got a lot of shorts stuck at the bottom the last 2 days. All right, when we went to challenge those lows, got a lot of short sellers stuck at the bottom. A lot of longs that were long up top are now shaken out of their long trade. Understand that when it goes down, two things happen. One is the traders that are already long are getting stopped out. Okay, they're getting out of their position. They're squeezed out. And new shorts are coming in, hoping to make money on the downside. When we bottom out, what happens? The sellers that got stopped out up, or the buyers that got stopped out up top are now buying it again on the dip because that's what they're trained to do. All right. And then that causes the first wave of sellers to get squeezed out. The short sellers get squeezed out. And then what happens? And more buyers come in, more shorts get squeezed out, and the thing ramps up. So be careful today. It's got an opportunity to really come in there and bloody up a lot of shorts. All right, be careful. That's all I'm saying. Another big report today is the Department of Energy release around oil inventory. So API last night, it's a private release, showed crude had a draw of 1.8 million barrels. All that means is there's less supply. There's actually a draw. So think about an inventory, a storage of sorts, minus 1.8 million barrels left that storage. So there's lower supply or higher demand, maybe both. All right, and that really caused crude oil to just skyrocket upwards about 51.65. It's going to trade to 52 today. We have a target on oil at $52. So watch the 51.95 to 51.98, even 99. And I'm not kidding. Oil is the widowmaker. If you're long oil and say, I'll sell it at 52 bucks, guess what? You might never get it. You might get 51.99 and the thing just plummets 40 cents in a matter of minutes while you're checking your work email. I'm telling you, be very careful on oil. It's burned a lot of people, myself included. So set targets a little bit below where you want to take profit and get in a little bit earlier to a little bit maybe later for a confirmation trade. 61.8 Fibonacci level on oil is 52 even. Watch for that as a target today. We might get it. 10:30 in the morning today, we're going to have oil numbers coming out. So we have two. API is the Tuesday at 4:30 p.m. after the market closes. And then Wednesday's Department of Energy report. That's at 10:30 in the morning. Now, remember this. How do you trade the Department of Energy report? So many new traders get this fact confused. They look at the Department of Energy. If it's a draw, then they say oil has to go up. If it's a build, oil has to go down. But they don't even understand that there's another report called API because it's a private report that most people miss entirely. It just floats out of their brain. It's like they don't even know it. I can tell you oil traders have been doing this for 3-4 years and have no clue what API is, all right, which is absurd to me. Don't be that person, by the way. So what you want to look at now is we have a draw that's built in to the price of oil, all right? We have a draw. So if we get a small draw on Department of Energy, that's no longer a surprise. That's now actually an expectation. So a small draw, less than 1.8 million, might actually lead to prices going where? Down, all right? Because there's less supply. However, there's less than there was yesterday. Therefore, that's actually the same as a build. Does that make sense? I don't know if I'm losing you guys here. All I'm telling you is don't trade the number outright. Trade the number in comparison to what's already priced in because of yesterday. If you don't know what's priced in yesterday, well, then that's more reason for you to subscribe to our trading room because we're going to cover the oil number at 10:20. We're going to do a preview, what to expect, what numbers to listen to, and we're even going to include the live squawk, and we're going to live trade it today. All right, so you need to be in a group of people who are doing this thing professionally. If you're doing it alone in a box or in a corner, biting your fingernails at home, chances of success are very low trading that way. All right, that's the next thing you got to watch out for. 10:30 a.m. today. Are we going to get a draw? Will it be a build? What will that mean for the market? There's definitely a good trade coming out of this number today. I'm really excited. Tuesdays are the days that I can make a ton of money and make my whole week within the Tuesday early on. All right, especially on oil inventory data. So didn't do so well last week. I don't know why, but this week is going to be different. I'm telling you. Today, we also have meeting minutes from the Federal Reserve at 2 p.m. Eastern. I'm going to tell you it doesn't really mean much. Those minutes have already been priced in. The hikes have been priced in. This dovish interest rate environment has been priced into the market. The market doesn't really care so much as interest rates anymore. And this is also another area where traders are starting to get confused. Finally, everyone's caught on to this hawkish interest rates means down market, right? Because the market's scared. Well, first of all, that's wrong because now the market started taking a positive light. But even more than that, we don't really care about interest rates anymore. We know they're going to get raised, all right? We know the jobs market is strong. We know inflation's going up. We know that everyone on the Federal Reserve thinks we should have higher interest rates. That's no longer a factor, all right? Unless there's a surprise of some sorts, the market's shrugging that off and saying, meh, we kind of expect that. All right, what the market's now looking at, and you need to know this, and you heard this here first, 6-7 months down the road, when this starts to become mainstream media, you're going to say, I heard it first at Trade Pro Academy. Guaranteed no one's talking about this. We're talking about the balance sheet right now. That's what's important. The Federal Reserve, one of the members yesterday, actually made a reference to saying, you know, we don't have to raise interest rates. We could start to look at other ways of winding down our balance sheet, and that will cause interest rates to go up through a mechanism that takes a long time to explain. But what you need to know is they have another tool, another policy tool that no one's considered, and that's what the market's focusing on more now. It's the balance sheet. All right, you spent, since 2009 until today, you spent so much money, $4 trillion stimulating the economy. That means you now own those assets. How the heck are you going to get rid of them? That's what everyone's wondering. How are you going to get rid of them? Because a lot of paper they have on the book, and they have to sell it to get rid of it and to take that cash flow out. Right? Think about this. When you're buying an asset, you're taking possession of the asset and you're giving the market money. Think about that. If you're buying on the open market, you're removing liquidity and paying out cash. That's one of the important aspects. All right. In terms of what else to look for, that's the balance sheets. That's today. Also, yesterday we had some really big news. Richmond Fed President Lacker has resigned. He was involved in a scandal in 2012 where he leaked some sensitive data to the private sector, and he admitted it was him. He's not a voter on the FOMC, so you really don't have to worry about it. It's almost like a non-event. However, you do need to know he was the leaker of that data. He's resigned his position. All right. Janet Yellen was asked about this months ago. She said she had no idea who it was. It's not factual data, and now here it is. It is factual data. The guy's resigning over it. All right. So that happened yesterday. He's not a voter. He was a moderate hawk. We can pretty much just write off Lacker and say goodbye. Goodbye, Lacker. It's been a pleasure. Thanks for your commentary. Apple, 2 last events, and I got to go very quickly. Just got to set up the trading room, and someone's waiting for me downstairs. They're locked out. It's my fiance. I'm choosing you guys over my fiance. Don't tell her that. Apple, all right. We just had a news event this morning, just fresh off the press, that they might delay their new iPhone launch to October, November. Watch out for that, because if on the open Apple tanks, it's nice and high. It's at all-time highs right now. If it tanks, it's going to bring down what? It's going to bring down the equity indices. It's going to cause some selling. It'll force some sell stops to the downside. Put Apple on your radar and put that on your correlation charts today. Another company you have to watch for is Elon Musk's Tesla. It's 100% official now. Elon Musk has surpassed Ford in company value and has surpassed General Motors. It's insane. He just went in there and took out all the competition. It's now it's pretty much the biggest automaker in the United States. All right, Tesla is, and that's phenomenal news. It's now valued at $52.7 billion. Shares are up another 1% yesterday, and they crossed over the $300 mark. So good work to Tesla. Anyone that's trading it, it's past General Motors. What was the note I wrote here? Just watch out for that stock. All right. I continue to think it looks increasingly better and better day by day for a short. You got it. I'm not looking to buy this thing at record high valuations. I'm looking to clobber this thing. Q1 inventory or Q1 sales of their vehicles were reported higher than expected. And I think we got some last life to break above the high, rope in some retail money to get long. And I think we go in there and let them have it. 3-4% drop. That's what I'm banking on. So I got a Tesla short floating at some point. Subscribers, I'll tell you about it in a minute, or throughout the next couple of days for sure. So I'm not ready to do the trade yet, but it's on my radar. Apple, watch out for the open. Fed at 2 p.m. is going to be a non-event. All right. Jobs report was really strong. Markets are at their highs. Let's see if we can carry forward with that momentum. That's your morning market update, guys. We're starting off on a bullish note. Look for opportunities to buy the dips in the morning, and in the afternoon, the trade has been sell the rallies. I don't think we do that today. I think today we just keep cruising higher and higher and higher, and we shake out some of these shorts that are accumulated at the lows. Have a great day. Check out our trading room. Sign up. You get to trade in the community of traders as well. We do day trading on futures. We don't just trade one product. We do oil. We do equity indices. We do commodities. We trade anything wherever there's opportunity. All right. And then we have a separate service called Options Pro. That's a newsletter on a daily basis. Every day around 1 p.m. Eastern, I'll send you a list of stocks that are about to break out and make really sharp moves. All right. Whenever there's volatility and movement, there's profit potential for you. And that list is based on where the smart money is going. Institutional flow, big capital going into the stocks. I'll tell you which ones to watch for, 2 to 3 on a daily basis. Sunday, you get a live webinar with analysis on what's going to happen the upcoming week and an options newsletter. That's the Options Pro package. Day Trader Pro, you get this webinar, including morning sessions. We trade together. We trade the open and access to our live trading room so you can trade with our community. Check it out. You got a 30-day money-back guarantee. If you don't like it, I don't want your money. I want you to take it. And I don't even want a reason. If you just say, I don't like my 30 days, then you could go. There's probably more effort for me in investigating than just give you the money back. If you don't like what you're hearing, it's not the right product for you, great. But it's backed by a 30-day money-back guarantee. Take care. Check us out, tradeproacademy.com. Have yourselves a good day. Trade careful out there. We're going to have a lot of movement. And don't fall in love with your position. Don't fall in love with being right. Fall in love with making money. That's what this business is about. Don't try to guess the direction. Spot the direction. Analyze the information in front of you and make a decision based on that. You're not doing this to be right. You're doing this to make money. All right. I was wrong 3 out of, what was my winning rate? Last week I had 2 winners and 11 losses, and I made that back up with 1 trade. So I went 3 for 11 on my trades, and I made money that day. All right. Do you think if I was focusing on being correct in my direction, it's going to go up. It has to go up. I'm going to buy more. I think I would have made money. I would have got slaughtered like a pig. And that's why you don't go for direction. You go for dollars. Take care. Have a great day. Let me just open up the subscriber room now. Hang tight. Give me 2 minutes. YouTube, I bid you farewell. Oh, that hurt the bicep. Bid you farewell. I'll see you guys tomorrow on the open at 9 a.m. or pre-open. Take care. Bye.